Hello, everyone. It's Friday, February 4th, 2022, of course. And I thought I would do a short video taking a look at the market. Of course, we will have our weekend meeting as usual on Sunday, and I'll send you guys the recording of the session as usual. But I'm seeing some interesting things in the market here, and I'd like to share it with you. I just sent Alex Elder, my friend Alex, an email about something which I'll get to as we go along. In any case, before we begin to look at charts, let's bring up the usual disclaimer that, legally we have to show you because obviously we can't attempt to give you investment advice in a scenario like this because, first of all, I'm not a professional investment advisor. I'm not licensed to do that. I'm a licensed psychologist. But I do this for my own purposes, and it's put on YouTube, so anyone can take a look at it and and make of it whatever they will. So let's begin. So I'll start as usual with a weekly chart of the S&P 500 and just quickly go through some of what we are looking at here. First of all, we can see that those moving averages broke down. The 4 EMA crossed below the 9, the red line. The yellow line crossed below the red line. That's the 4 breaking below the 9, and then we had the 9 breaking below the 9 breaking below the 30 weighted moving average, the green line. So this we are all aware of this drop on the chart, and this is a weekly chart. Excuse me. What we ended up having here 2 weeks ago is a hammer. A hammer indicates, according to Japanese candlestick approach, that we may be hammering out a bottom. Okay, you can see that it looks like a hammer anyway. Now, this week so far, we have what is called a shooting star, which is just the reverse of the hammer, as you can see. Oftentimes, this leads us to a downtrend, because the market's rejecting this price here on the weekly chart. So those are some of the things we're seeing right here. Now, I sent you an email some time ago saying that we have a support resistance line right here at about 45.43 on the S&P. So we had resistance here, we broke above it, and it acted as support here, and then we broke below it, and it's acting now as resistance. Will we get above it? Well, uh, I'm betting that we will, but so I hope I'm right. Uh, anyway, let's go on. Let's go on. You can see that when we came all the way down here on 2 weeks ago, okay, on this candle here, this candlestick, the hammer, we had a very high level of volume because this is a 50-day moving average, right? 50-week, in other words, moving average. And this is where we had a high here on the volume. So there was a lot of volume. And the other thing that we can notice here is that we actually got support at the 50-day moving average. The yellow line is the simple 50-day moving average. The magenta line is a volume weighted moving average. And they pretty much run alongside each other, and they do here. So you can see that we had some support here because while we made a low at 42.22, which is now key support, if we break that at all anytime in the near future, it's, Katie, close the door, or whatever the saying is, hold on to your hat because we're going much lower. So Larry McMillan pointed that out too recently. This is what we got to look at, and it's obvious. This is the most recent low. So we have resistance at 45.43. We have support at 42.22, and we are now trading in between those two levels. The parabolic on the weekly chart is with the parameters that I use. I know there are default parameters, but I don't use them. I can't go into all the reasons now. Uh, and the parabolic is still above the most recent bar. If we move a little higher this week, we might see this parabolic go below the next week's bar, but that's to be determined. Okay. Now, on the momentum indicators, both of these momentum indicators here, the triple momentum indicator is below the key level of 4%, and MACD has been trending down below the zero line. So momentum is not favorable right now. Okay, we hope that that would turn, and that hasn't been the case on the weekly chart anyway. Let me pause here for a minute. So we now switch to the daily chart of the S&P. On the daily chart, you could see that when we came down here, and we rallied back up a bit this past week or so, you could see that we hit that 50-day moving average, right? The volume weighted one, the magenta line, and the regular simple moving average, 50-day moving average, and that acted as resistance. And I remember sending you an email saying that we are likely to find resistance at this level, right in this area here. So that's what we had. We had some resistance here a couple of days ago, which was Wednesday, I guess, and then Thursday, and now today's trading is in this level here. So if we notice that this 200-day moving average seems to be it's a possibility that this 200-day moving average will act as support, and we are in this critical range here where the 4 cross above the 9, we have a doji candle. It's almost a hammer, it's forming a hammer type candle, hammering out a bottom. And so there's a real struggle going on here between bulls and bears. We got resistance overhead, and we got support at the 200-day. And I recently plotted this uptrend channel here. You can see these two white lines going here. This one at the top, at the highs, from this high to this high, and from the lows here to today's low. So we have a channel here. We're trading within that channel, and the bullish scenario would be that we find support at the bottom of the channel and go up from there. But bear in mind, we still have this resistance at the 50-day, both at this level, at this trend line here, sorry, at this support resistance level here, right? See it? I drew it right here, right? This same one we saw on the weekly chart. We have a lot of resistance here. So if you want to know what I'm doing, well, I'm mostly invested. I'll just read off a list of stocks that I own. I own AMD. I own AVGO, which is Broadcom. The Canadian energy company CNQ, CVS, the pharmacy, EPD, the pipeline, Google, GSG, it's a commodity ETF, McCormick, MCK, Qualcomm, Schlumberger, SLB. I own these three ETFs, sector ETFs, XLP, XLE, XLK. Then I still have Apple and Berkshire. I bought Berkshire a couple of weeks ago. I have Dell again, Microsoft, and I have the Canadian bank TD. Now, what I've noticed is that quite a few of the Canadian banks have nice looking charts. That's why I bought TD. And Royal Bank looks the same, and Bank of Nova Scotia, especially for those of you in Canada. Those are looking really interesting. Okay, let's go back to the daily chart. On the daily chart, you could see that since the parabolic switch from this level here to this level, right, below the most recent bars, it remains there. By the way, because I own these stocks, I'm not suggesting, of course, that you go out and you buy them, I mean, my risk tolerance is different from yours, my capital is different, etc., etc. Okay, so I'm just giving you a heads up on the fact that I do own a lot of stocks again, and I'm on the bullish side of things. Okay, I'm bullish, although I'm aware of this resistance here, and I will pull the trigger very quickly. I mean, I'm sitting here most of the day, good part of the day, And so I have the opportunity to just pull the trigger and sell. So I'm more of a trader than an investor now. All right, on the daily chart, we could see that we were actually trading with volume above the 50-day moving average here of volume, right? So this was pretty bullish here, I thought, right? And now we have this candle that you could see in real time right now. It's moving, it's changing, finding support at the 200-day average and at the bottom of this price channel here. I think we have some interesting setups here. I'll get to other things again. Now we broke above this downtrend here of the highs of the momentum indicator, the triple momentum indicator, but we haven't crossed the 4% line. If we did that, we will find a stronger indication of a trend like we did here. See, like we did here when it crossed above, when we crossed above the 4% line, but it started trending up a little before that, the market. But now if we crossed above it again, or when we do, I'm hoping we do, we will have a nice, we'll have some more confirmation from the momentum indicator. And on the other momentum indicator, the MACD, one we take buy signals from 1226.9, notice that we got a buy signal back here. Actually, it was on the day that we hit that resistance level, we got a buy signal, but we're still on a buy signal here from MACD. Okay. Now, I was watching CNBC a little while ago. I like to watch the 12 o'clock hour because the traders are on and you hear what they have to say. Now, Tom Lee was interviewed today and he was saying that he expects a 13% move, I believe, from this level, and I haven't really calculated it, but he mentioned 48.50. And I think he said a 6-week rally. He expects February and going into March to give us a good rally. Well, I will show you the seasonal on that. If you recall, we have a 2-week rally in February at least, and then we have a nice rally coming in March according to the seasonal charts coming in March by March 7, March 8th for another couple of weeks. Okay, quite a few weeks into May. So we'll take a look at that. But this is what Tom Lee is looking at, and I put it on the chart so we could refer to it. This is a daily chart of TQQQ, or the NASDAQ, the triple leverage NASDAQ. And chart is very similar to the S&P as you would expect. But there are some differences. However, you could see here that parabolic just switched again to being above the most recent bar today. So that's not good. But I noticed that MACD is still trending up. We don't have a move above the 4% line here yet. And volume wasn't as high as above the 50-day moving average as it was with the S&P. So these are just a few things that I'm curious about. We also have, you can see that overhead resistance here as well, and we are still below the 200-day moving average on the Qs on the Nasdaq. So we want to bear these things in mind, okay? We can't just be blind to any of the bearish signals. I might also mention that one of my friends sends me almost every day a summary of the findings of some folks who do Elliott wave theory analysis, and they've been pretty bearish, calling for a major crash, major collapse of the market. So and they've been pretty accurate recently, at least recently. So we'll see where we go from here. But as I said, I could get out of the market very quickly. Hold on, we'll talk about some other things. So here's a chart that we've looked at in the past, and I was asking Alex his opinion on it today. I sent him an email, as I mentioned before. What Alex showed us was that when we have, let's look at the weekly, when we have a drop like we did in March of 2020, he sent me an email saying, take a look at the minus 4,000 line, okay, here. He says it dropped all the way down to like minus 16,000. And when it gets back up to 4,000 right here and it crosses it, the market's going to rally. And that's exactly what he had. That's exactly what happened. Now we're back in a similar situation. We dropped below the 4,000 level, right? We dropped all the way down to about minus 7,000. And now we're back up to about 2367. So we're above the 4% line once again. And I just wanted to get his opinion if he thinks we might move higher from here. So I asked him the question. Wait to hear from him. So that's what I want. One of the things I wanted to show you. That chart was a chart of the new high, new low index. Well, that brings me to the end of this video. It's about 15-20 minutes. Have a good weekend. We'll do the family meeting again this weekend, and I hope you have a good weekend. Okay, bye bye. Good luck.